Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and let's take stock of the markets and a lot of stocks which will react today on open. So let's try and figure out all of that as well. First, the US markets took a bit of a U-turn, really. I mean, were doing well for a better part of the day, and then went off about two-thirds of a percent, if you will, for the Dow, the Nasdaq too, correcting a little bit. So, well, we didn't quite have the 127-year-old record broken, uh, but still, 13 days of gains, straight gains, is not a mean feat. So good going there. No big changes on the other cues per se. So that kind of steady as they go. No big changes there. The gift nifty should be pointing towards a start which is indicating some consolidation. Remember, we had a downtick in trade yesterday for our market, so kind of preempted some of this as well. Some global news flow before we get to the key stats of trade yesterday. So gasoline prices in US have hit an 8-month high. Now that is a bit of a pickle from an inflationary perspective. Sugar spread has collapsed on good prospects for Brazil harvest. More so for the domestic sugar stocks, it is important, but important to keep that in mind as well. China's weak consumer and property market point to possibly a gloomy economy as per a headline on Bloomberg. Well, and would that mean that there is more stimulus coming is the question. And at the Bali G20 summit, Prime Minister Modi and Xi Jinping discussed bilateral relations. Well, hopefully they improve sooner rather than later. So some global news flow there. In other news, of course, Intel posted a very strong quarter, and the stock is up about 6-7% in after hours. And frankly, viewers, if you follow the story of what Intel did or what Intel has done in this year, from promising about a profit number or good prospects only 2 years out to suddenly bringing a surprise profit, you now know that at times even managements don't quite know what is coming up in the business. So really strong showing by that stock in the US markets. When they open today, Intel will be a strong show. It anyways has in aftermarkets moved quite a bit. Nevertheless, coming back to Indian markets, the key stats of trade yesterday, something that we've started doing now for the last 3-4 sessions. Hopefully it helps. So Nifty corrected about 0.6%, but recovered from the day's low, by the way. It had corrected nearly 0.8, 0.9%, ended up at 0.6% lower. Bank Nifty wobbled, and the rollover this month is also not very high. So you can very well argue that there are not too many long bullish positions in the Bank Nifty, despite the fact that banks aren't exactly expensive and the results thus far have proved to be okay. Yesterday, Tech Mahindra, Axis, and Bajaj Finance led losses along with Mahindra and Mahindra, which was the top loser. And pharma stocks and like Cipla and Dr. Reddy's led the charge higher in trade. Now, therefore, what's the trade setup of today's trade? Well, yesterday's weakness attributable to overbought conditions and the monthly settlement maybe. The 20 EMA now, therefore, of 19,500 remains the key support zone for the indices. Remember, bulls have enjoyed a winning streak for 4 consecutive expiries, with July recording gains of more than 3.5%. Can August finally be that consolidation move? Support at 19,500 or slightly lower, resistance as we approach 20,000. Could we be there in and around that period? Very likely. We could even be lower, by the way, and even that would be considered a consolidation move because we've had such splendid run since March that you can't argue too much against it. And pharma continues to be the key sector being bought into. By the way, for the July series as well, the pocket which had the maximum gains was pharma, 9.5% if I'm not wrong. So really strong show by pharmaceutical stocks in the series gone by as well, and that's to be kept in mind. Flows were negative, 3979 crores from the FIs. DIs bought about 2528 crores. And even if you dismiss this as a one-off, you have to admit that in the last 10 days, we've had 3 days of FI sell numbers. One was a small double-digit number, but it's not a one-way street anymore, as it should not be as well, because they've pumped in money in all of the last 3 months, right? May, June, and July too, despite these sell numbers, would be a very strong month for flows. So at some point of time, I mean, you will hit normalcy, if you will. So that's to be kept in mind. It's a big day for earnings too. Not too many large index names, but well, Motherson Sumi is important, Manico is important. There is M&M Financial Services, Exide, because of the recent run-up that we've seen in that stock is important. There is Chalet Hotels, and important to see what this one does after what Indian Hotels has done. There is United Breweries, Supreme Industries, well, SBI Cards and Payments. So Bunch of very important names come to your numbers today, so do watch out for those. Now, stocks to watch in the session today. That's a large list, so be mind with me. So first one is Bharat Electronics. So I'm starting off in the order of stocks that might have the biggest reactions on open. So BEL, revenues up 12.48% at 3533 crores versus 3141. The estimate was about 3494 crores. So they've come in marginally above estimates, actually exactly in line with estimates on that base. But the EBITDA is where the beat came in, 673 crores versus 522. The expectations were 546. So decent beat on EBITDA, right? Nearly 25% or thereabouts. EBITDA margin 19.4% versus 16.6. The expectation was 15.65. Big beat there. Net profit therefore 539 crores. Expectations of 498. A beat out there too. So strong showing by BEL. I would reckon that this one could have a gap up start in the session today. Indus Towers, well, the point is it's seen such high rolls and so many long positions rolled over that the expectations were very high. Now, revenues up 2.58% at 7,075. No big changes there. EBITDA 51% though. EBITDA margin 49% versus 33%. Net profit 1347 crores versus 477 crores. The expectations were in fact 1427 crores. So in a sense, they actually came out with numbers which were slightly lower than estimated, but they did not take any further provisions against receivables from IDEA, which is big. Second consecutive quarter of no provisions. The tower additions was positive. FCF was negative, of course, due to the sharp increase in the capex requirements. So very likely that despite the fact that the stock has already run up in the last few days, that it could have a positive reaction. So do watch out for Indus Stars in the session today. Then ACC, I thought was a really interesting number. Remember 2 days ago, 3 days ago, I was telling you about the Ultratech con call and how constructive they were sounding. The stock has done well since then. Now ACC comes into the picture. There is excuse me for this light issue, but anyways, maybe I'll come to ACC in a bit, but watch out for ACC as well. I'll give you the numbers in just a moment. There's an MK note which is very constructive there, so that's to be watched out for. Then Lupin is an important one to monitor. They've announced a resolution of the US FDA warning letter for Goa and Pithampur plants. The warning was received in 2017, by the way. The warning letter, November 6, 2017. They've received the correspondence addressing the concerns raised in the warning letter for the facility. Now, why is this important from a Lupin perspective? Because all major facilities of Lupin have finally gotten the approval from the US FDA without any mistakes or errors. Pithampur and Goa are crucial facilities for Lupin, by the way. And this will now you expect the US sales ramp up on large wins with Spiriva launch in the coming quarters, etc. So I would suspect that Lupin has the potential to be the stock of the day as well, despite the fact that it was up about 4% yesterday and has gained about 8-9% in the last 1 week. This is very positive news for Lupin. Watch out for that. IPCA is the other pharma stock in focus. CC has approved IPCA Labs proposal to acquire controlling stake in Unichem. This is a formal approval. The news was well known. So watch out for IPCA and Unichem as well. There will be an open offer made, 26% stake, etc. So this is well documented, but a formal approval from CCI. The other one which has done very well in the quarter is Ajanta Pharma. Revenues up 7%, 1,021 in line with estimates. EBITDA performance very strong, 271 crores. Margins much better than estimated. Net profit rose about 19% to 208 crores versus 175 crores. So really strong show by Ajanta Pharma as well in the session today. I'll just try and give you a sense from somebody who sent this note to me on Ajanta Pharma numbers. Very good set of numbers. They maintained the EBITDA margin guidance of 25% plus or minus 1% for FY24, which is good. Mid single digit YOY growth in US sales for FY24. Price erosion has come down, which is actually very good. Mid teens YOY growth in branded generics as well. India business up by 15%. I think they put in probably all the right things forward Ajanta Pharma, and therefore that's the other pharma stock that you got to keep in mind. So these are the few that will have probably the biggest reactions. Now some of the others. So Blue Dart, well, the numbers seemed a bit underwhelming. Net profit down, margins 15.4% versus 20.6%. So very likely that the stock might see a bit of a negative reaction, but it's an illiquid stock. Be careful if you're trading it. Indian hotels. Now, a lot of smart money told me that they are out of the hotel stocks because they had a fabulous run. I look at these numbers. Yes, they are lower than estimated. Sure, the stock would react negatively, but the space still seems to be constructive. The presentations still seem to be good. The growth outlook still seems to be very positive. So, don't quite know. I mean, 16% uptick in revenue and a 31% uptick in PAT is not bad. But you have to keep in mind that the valuations that maybe one or two of these companies are trading at uh, actually bake in very positive scenarios. So a slip here, a slip there would actually upset the apple cart. So very likely, I mean, I'm saying that Indian hotels in today's session, by virtue of the valuations that is trading at, are the numbers up to the mark? No, they are not. Are they very disappointing? No, they are not. But certainly not up to the mark. And you probably got to deliver quarter after quarter in a cyclical industry like hotels to be able to get what you're getting. So I would suspect that there could be maybe a bit of a negative reaction, but let's wait and watch. Some brokerages are saying that it's okay. So keep that in mind. JK Lakshmi was a weak set of numbers, I thought. Margins corrected, net profit down, revenue up 4.6% only. So yeah, not the best of numbers, you have to admit. And cement, a clutch of names have been doing okay, like I said about ACC. So in JK Lakshmi's case, the slip in volume kind of drags down the overall profitability. EBITDA per ton was at 616 versus 691 QOQ and 848 YOY. So, not a great number by JK Lakshmi, not a great number by Sagar Cement either. So both of those stocks actually could come under a bit of pressure in the session today. Shyam Metallics I thought was okay. The stock is trading at 52-week highs. Keep that in mind. 403, 404 or thereabouts is where the stock is. So that's to be borne. We haven't given the price here, but that's okay. It is at around those levels. Now, revenues up 2.5% at 300 in line with estimates. EBITDA down 33% at 404, but better than the estimated number. Margins almost in line or slightly better. Net profit down 42% at 237, better than the 195 crores. And Shyam has posted better numbers than Godawari Power and Ispat. Bear that in mind. Good numbers. Uh, I thought under the circumstances. So let's wait and watch. Sona BLW or Sona Comstar, whichever way you call it, both are right. But Sona Comstar consolidated numbers, revenues up 25% at 731. The estimates were 776. EBITDA margin at 27.69 versus 32.15. Net profit 47.7, up 47% at 112 crores versus the estimate of 108 crores. Now, the thing about Sona viewers, will stick with this plate, is that they have estimated loss of revenues of about 25 crores in Q1 and about 100 crores in FY24 in the electric two-wheeler business due to the FAME 2 incentive reduction. But they expect traction in the motors business to be much bigger than the ICE starter motor business in 3 years' time. So they're sitting on a pre-order book. Uh, but it's not a cheap stock, and 100 crore number miss or a shave off on the revenue front spread over 4 quarters, not that much, but could lead to small misses like this relative to estimates. Maybe the estimates get corrected in the second quarter itself. So I think the Jeffries note was constructive, but it's an expensive stock, may react negatively today. Let's wait and watch. Rail Vikas Nigam OFS was okay. They got good demand, and therefore that could help the stock. Let's wait and watch. The other thing is MK on ACC. This is the note that I was wanting. So the Q1 EBITDA is 45% and 33% above consensus and their estimates. They reported, MK says it reported industry-leading volume growth of 23% YOY to 9.4 million tons. And the total cost per ton declined 11% YOY, 8% QOQ, benefiting from lower input prices and better operating leverage. They've raised the target price as well. The other brokerages are neutral. Macquarie is neutral. Jeffries has just given a first cut. And therefore, they haven't come with the final note, at least the one that I didn't have. So, but because of the beat, you could argue that cement looks in a prime position. The way I spoke about Ultratech a few days back, where in their con call suggested that they are very constructive on the business as well. Watch out. Some smart money tells me that unless crude prices plays havoc, it could be a good turn of the next couple of quarters for cement companies. Viewers in the Ultratech con call, they mentioned that despite monsoons settling in, they haven't seen too much of a price erosion. That's quite something. So let's wait and watch. Standard disclosure, of course, that the Adani Group owns ACC and Ambuja, and AMG Media Networks, a subsidiary of Adani Enterprises, holds 48% stake in Quintillion Business Media, which is the owner of BQ Prime. So please take that caveat. But I mean, independent of that, the whole pocket seems to be pointing towards decent performance. So do watch out for the cement stocks in trade today. So there's a BEL, there is Lupin, there is ACC, there is Indus Towers, a clutch of others. JK Lakshmi maybe on the negative side, not the best of numbers. Sagar Cement on the negative side, not the best of numbers. A lot of numbers to watch out for on a day which could be a day of consolidation. So expect a flattish start, but a lot of movement in specific pockets. Expiry to expiry, pharma and real estate have seen the maximum long rolls, so that's to be kept in mind. In terms of stocks, I was reading a quant research note, I think from MK, which spoke about how Indus Towers and Escorts have seen the maximum rolls, so that's to be kept in mind. And lastly, I was reading this very interesting note from Motilal Oswal on the takeaways from Vedant Fashion con call. And Vedant Fashion says that this year, actually, I think I have that detail for you just before we wrap up. They say that this year, wedding dates in the second half of FY24 are 30 to 40% higher versus second half of FY23. So imagine the sales growth that could come in for maybe a Vedant, maybe a Titan, maybe a Kalyan Jewelers, maybe a Thangamal Jewelers, what have you, right? Everything related to the wedding season would have a fabulous period. In fact, it would be great for consumption as well, maybe. So bear that in mind, that we'll have a lot more festive days in the second half relative to the base effect in the corresponding quarter last year. So keep that trend in mind. Thanks so much for tuning into the trade setup. A bunch of conversations today, by the way. Sunil D'Souza, CEO of Tata Consumer, joins in at 9:30. Then you have Lotus Labs, Dr. Satyanarayan Chava, after a very weak quarter, talking about what could happen to the rest of the year. So that's to be watched out for. There is Puneet Chatwal of IHCL joining in at 10:45 a.m. Tune in for that. Vivek Vikram Singh, MD and Group CEO of Sona Comstar, talks about their numbers at 11:30. So that's to be kept in mind. And of course, last update, BQ Prime is launching its brand new initiative called the Alternative Bet. The idea is to tell everybody that in India per se, it is not just equities, it's not just debt. The whole host of newer alternative investment classes that are coming to the fore. And for anybody who can take advantage and can study them, should try and do that. It is an initiative that will run through the course of the next 1, 2, 3 years, trying and bringing as many alternative investment managers to try and talk about what's happening in the alt space, so that people realize that the power of diversification in a portfolio. We start the Alternative Bet as a series today with the founders of Neo Asset Management. It's a niche group established in Mumbai, and they talk about all the options out there on the table, and then talk about a couple of aspects that they specialize in.
The world of SIP has changed Indian equity markets and Indian mutual funds forever. We think in alternatives, the next 10-15 years is a phase where Indian money will change the world of alternatives. We need our savings to come and channelize these savings into these instruments so that it can be productively channelized into buying roads and transmission lines and data centers and lending to companies. And that is what we want to do at Neo. We want to channelize long-term savings of our customers into some of these highly productive assets.